Eurozone inflation fell to 0.5% in May, down from 0.7% in April, according to official figures, underlining the stubbornly low inflationary environment that has gripped the Eurozone. So what will the ECB do next? Joining me down the line to discuss is Nick Stamenkovic. Nick, the drop in inflation means the ECB will be expected to act to boost growth when it meets on Thursday. A rate cut seems to be a stick-on, but if implemented, what do you predict the unconventional tools may consist of, and to what extent is action already priced in?
Right, well, I think it's pretty clear, judging from comments from Mr. Draghi and various other ECB officials, that there will be some sort of action on Thursday. Certainly the economic backdrop justifies further easing from the ECB. Inflation, as we saw today, is surprising the downside and is well below the target range. Credit growth remains anemic, particularly in peripheral economies, and the euro area economy is growing at a sluggish pace. They'll clearly cut interest rates, the refinancing rate between 10 and 15 basis points, accompanied by a negative deposit rate for the first time. The question is, what do they do in addition to that to help break the logjam in credit markets? I think the most likely thing they're going to do is do targeted LTROs, long-term refinancing operations. And they could also announce some measures to help small and medium-sized enterprises, perhaps hinting at buying asset-backed scheme, ABS in the future, asset-backed securities. But I think they'll stand back from any QE at the moment, using that as a final response if they need to go down that road in response to signs of deflation if they occur in the Eurozone economy. The rate moves are largely being discounted in the market. If you look at the short end of the bond market, and if you look at the performance of the euro recently, it's quite clear the market is factoring at least rate cuts and possibly some measures to boost liquidity conditions.
Nick, other data showed compared with a year ago, the unemployment rate fell in 18 member countries, remained stable in 2 and increased in 8. The lowest rate was in Austria at 4.9% and the highest was in Greece at 26.5%. Now, while the overall picture may have been a touch positive, how does the continued bloc divergence potentially add to the ECB's policy headache?
Well, it clearly shows there's a huge divergence across the euro area. Most economies are now exited recession, even Italy, although we have some disappointing data for Q1. The worst appears to be over there. But Germany and Spain seem to be leading the way, with Italy and France lagging behind. And that's very much reflected in labour market dynamics as well, where the German unemployment rate is very close to a record low, whereas Italian unemployment has been rising and Spanish unemployment that's been falling is still stubbornly high. And with such tepid growth coming along, and with disinflation pressures in the economy and deleveraging in some of the sectors, it's difficult to see unemployment rate coming down quickly, particularly in the peripheral countries. The ECB can't really do an awful lot about that. Their mandate is price stability, but they will certainly do what they can to reduce any fears of deflation and to help the economy further down the road. But the message is that the unemployment rate in Europe, and particularly peripherals, will remain elevated for some time to come.
Thursday's interest rate decision is followed by a policy announcement. Market participants will look to the actions by the ECB for a broader outlook on the single currency. The euro has been under pressure as of late as traders speculate on ECB stimulus at the June meeting. Would the biggest risk for the euro be if the central bank don't act? What is your outlook for the euro dollar, for example?
Well, the euro dollar has already slipped back quite significantly as Mr. Draghi pretty much signalled that they will take action on Thursday. And we've had a host of other ECB members, including Mr. Mersch, who signalled the same as well. Given that the euro is trading as low as 136 against the dollar, it looks pretty likely to me that an easing has well and truly been priced in. The question is, what does Mr. Draghi say in the company press conference? I think we'll keep the door open for further easing as needed, but I doubt the ECB will go down the QE route just yet. Consequently, I think the euro dollar will probably stabilise, and the risk is that we might see a bit of a relief rally as the market sells the euro on the rumour and buys it on the fact.
Nick, thank you so much for your time and insights today. Pleasure speaking to you. Okay, well that's all from me for the moment, but make sure you stay with Dukascopy for tomorrow's GDP figures and Thursday's all-important ECB meeting. Goodbye for now.